This afternoon, we've seen stocks come crashing down once Trump gets a hold of social media once again. However, there was a warning sign out there you should have been paying attention to that was still present even after Jay Powell was done speaking this afternoon. Now, we come over and look at the fear and greed index. Right now, we're sitting at 30, so people are still fearful out here at this moment. Now, we come over and look at how the Indices fared across the board. The Dow was up 202 points. NASDAQ was down 172 points. S&P 500 down 10 points, with the Russell 2000 being up 3.45. Now, look at advancing issues versus declining. We had 66.2% of issues advancing on the day. Then when we come over and look at the sectors across the board, a majority of sectors were in the green, but look at the big laggard out there. The former leader out there, technology, which what's caused a lot of this massive rally that we've had, was the worst performing sector out there for the day. Now, early on in the day, we can start to see signs that the market was going to bounce. Look at the SPY today. We have a wick on the bottom. We have a wick on the top. And a lot of people thought, okay, we came down. We almost filled the gap that was left behind from Monday. If we look right here on the 30-minute chart, look at the hammer candle. We barely missed filling the gap. And traders like, oh, that's it. Double bottom. Here we go to the moon, but not so quick. Now, if we come over and real quick and we take a look at this 30-minute chart real quick. And I'm actually going to put this on the 1 hour chart. Look at the 1 hour chart of the SPY real quick. And then we jump over and take a look at the equal weight S&P 500, which is going to be RSP. One thing you'll notice is RSP was a lot stronger today than what we saw with the SPY. The SPY was slightly down, where the RSP was actually up 0.83%. And that means the equal weight S&P 500 was almost up 1%. When we look at the SPY was actually down 0.12%. Now, what's kind of funny is this article aged very well today. Dow turns positive, erases 600-point deficit as investors tries to shrug off latest U.S.-China trade worries. Now, as we can see from this chart right here, those tensions arose once again this afternoon. Look at the dollar index. Dollar index starts plummeting down. And look at the S&P 500 also taking a big nasty leg on the way down. So what was this all about? Trump goes out there on social media, China purposely not buying our soybeans and causing difficulty for our soybean farmers is an economically hostile act. But wait, that wasn't enough. He also goes right after that and says, we are considering terminating business with China having to do with cooking oil and other elements of trade as retribution. So just as traders thought everything was fine and we get maybe a double bottom and we're going to go off to the races, once again, we can see that tensions have not eased. Even though Trump made a taco before the market opened on Sunday, it is not over with yet. We look at this article right here. Stocks keep soaring, but economists don't think it creates a risk of financial crisis. And what's funny about this, in a group chat that I talk with a few traders out there, one of the traders put into the group chat the original newscast from the 1987 stock market crash. And what was funny, when I first picked out when I listened to that video, and I'll try to link it in the comment section down below if you guys want to watch that video, but analysts did not see the market going down, right? They never do. They are always going to be late. Now, if we come over real quick, Powell says job market is still a concern and that central bank will end bond purchases soon. And after Powell started speaking, the market was rallying up, but something we want to pay attention to. Look over here at the volatility index. The VIX today was on the move up. We almost came all the way down, filling the gap, and the VIX closes up 9.52%, almost above that 10% threshold. Now, keep in mind, yesterday, the VIX was down more than 10%, which implied that today or tomorrow was going to be a down day in the market. And technically speaking, if we look at the SPY was down. Now, it doesn't say how much the market will be up or down, but it did indicate today was likely going to be a down day in the market. So now let's talk about the warning sign as we're looking at the VIX that a lot of traders probably miss. Keep in mind, this afternoon, the markets were rallying up. As you can see, the S&P 500 was coming all the way back up towards the session high. Notice right here at 130, essentially the S&P 500 put in a top. But when we come over and we look at the volatility index, let's see at 130, where was the VIX at? The VIX was right down here. However, was the VIX still up on the session? Absolutely. So why was the market up while the VIX was technically still in the green for the session? That was a clear warning sign that watch out. All the fear is not over with yet, and there's probably going to be more trouble up ahead. So as we have economists saying there's no risk of a financial crisis, we come over and look right here. U.S. economy still vulnerable to a tariff shock, IMF says, and labor shortage tied to immigration crackdown could also sting. So again, the short story is we are not out of the woods yet. today, the only economic news that we had to contend with was really just Jay Powell speaking at 12:20 today. We go over and look at tomorrow. All we have is Empire State Manufacturing Index. So not a lot on the news front for tomorrow. I want to remind you guys right now, Take Profit Traders having a 40% sale off all their valuation accounts, 0 activation fee. Take advantage of this offer. Use code epitome at checkout. Now, if we come over and look at the dollar index real quick, what do we got going on over here? We look at the daily chart, dollar index was down just a bit, but come over and take a look at the precious metal gold real quick. Gold last night made another new all-time high. If we go down to a 4-hour chart of gold, we have an A to B equals C to D pattern, and we barely missed hitting that target last night. The target on that is 4195.6. And the high of gold was 4190.9. So we just barely missed hitting that target. So is gold getting ready to have a slight pullback? Keep in mind, on the daily chart, the MACD indicator has never, ever been this high in history. Now that does not mean that gold cannot go any higher out here. Now, if we come over and look at crude oil real quick, crude oil today also went a little bit lower, almost completing the first ABC target down at 56.85. The secondary target will be all the way down here at 55.87. This is more of a complex ABC pattern on the second one. On the much lower price one, this one is a standard ABC pattern, meaning it's just, you have one leg, small correction, and then we go down. Over here, we had the impulse leg down and then a more drawn out consolidation phase before starting that second leg lower. Now, jumping back over and taking a look at the SPY real quick, what do we got going on? Well, we've come up and we violated really the 50% level of that nasty down key. Now, keep in mind, the MACD indicator on the daily chart still has a bearish cross. In some of the areas I'm still watching on the SPY, 642.40 and all the way down here towards 633.82 are still viable targets. If we look from all-time highs right down to some of these targets, the first target would only put the SPY down about 4.72%. The second one would only put the SPY down about 5.97%. And again, that is not a major pullback given the fact that the S&P has been up almost 40% since April. Now, when we come over and look at the 4-hour chart, we can see the MACD indicator is just now starting to enter right around that zero line. And then we come over and look at the 30-minute chart. Notice this is going to be we got to be very careful right here. This is something that I talked about in last night's video. I said, if we are still in this area, this consolidation, and the MACD indicator gets back towards the zero line, we got to be very careful. Could this be setting up nothing more than another leg lower in this market? We can see this morning, we came down, we tried to fill the gap, we came very, very close. And then as the market rallied up, everyone's like, all right, that's it. New all-time highs, here we come. But wait, not so quick, because essentially we barely got above this minus development area right here before coming back down. Now, there's a couple things we want to pay attention to. One, how far of a retracement did we come down here for today? So I want to measure from the low to intraday all the way up to the high. Notice this afternoon, we only came down to the 38% retracement. What I want to be on the lookout for tomorrow, do we come down below the 61.8? If so, I really want to watch the 786. If the 786 level breaks 655.96, it increases the probabilities we are going to come all the way down towards the low. More likely than not, we'll break through. If we rejected the first time we came up, the second time we reject back up, the third or maybe even fourth time, it's highly probable we will then break down, which at that point would set up a much larger ABC pattern on the way down. If we come over and look at the 4-hour chart, for instance, we draw that ABC pattern down and play it out. That would give us a price completion down here about 644.82. And if we go down here and we look, where does that line up? Right here on the daily chart, just above one of those first targets that I mentioned to you guys just moments ago. Now, when we come over and look at the futures markets real quick, we come over and we take a look at the S&P futures. Now, this morning on the live stream, if you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. Congratulations to the Take Profit Trader winner today. Now, in the event, we had two scenarios we're looking to play out for this morning. One, are we going to have this larger ABC pattern on the way down? And you can see the price completion is 6452.51. I did say I did not think this target would get hit today, but this could be something that could take a couple days to work our way out. And what we were looking for is, do we break the swing point right here? Or can we break the swing point right up in here? Well, look what we did this afternoon. We broke the upper swing point. Now, the reason I was talking about that was this could also be an A to B equals C to D pattern on the way up. We were just waiting to see which swing point was going to break first. However, we got to be very cautious real quick, because technically we did break above the swing point. However, we did not technically close above it. Then we got a rejection down. So if we start coming back down, I am going to go ahead and invalidate the potential ABC pattern on the way up and really start looking for that ABC pattern to play out to the downside. Now we come over and look at the daily volume profiles on the 30-minute chart. That was one heck of a move on the way up. Notice the range today, 129 points. So 100% certainty, we have volatility increasing in the markets. That is good for us traders. More movement, more opportunities in the market. Now, a little pro tip, with the increased volatility, you might want to think about decreasing your position size as your stops and targets can be pushed out a little bit further. Now, as we look at this, we had a minus development area earlier today. We've already auctioned through that area. Right now, we are closing kind of in the middle of the range between value area high and value area low. Now, the point of control is very close, right up here towards value area high. Now, what I want to be on the lookout for tonight, if we start breaking 66.51.5, I really want to turn my attentions down here towards the low. Now, anybody that caught the long off of the low, congrats. I really like this. If you look at the low we had, you could simply have mapped this out right before the market opened, just drew a horizontal line across the overnight low. And once we whipped below it, and we came back up and we started breaking the high of that candle, you knew it was a pretty good opportunity that the market was going to go ahead and bounce up. I was really surprised we came up quite as high as we did. Now, in the event that we break below value area low and we start coming up, I do not want to use the point of control as target number one. Instead, I want to use this volume node right here, 66.84.25. Then from there, I'd want to target the point of control, then value area high. And then if we start breaking above that, probably look up here towards this point of control. Now, there is one additional target we can look at before that point of control, and that would essentially be this structure breakdown point right here, about 67.71. But again, we got to see which level we're going to break first. Are we going to break below value area low, or are we going to come right back up above value area high? Now, when we come over and look at the NASDAQ on the daily, we have a big candle of indecision. Notice the large wick on top, large wick on the bottom of that candle. MACD indicator is crossed to the downside. Now we come over and look at the 4-hour chart. MACD indicator still has a bearish cross. So we've had that push down and now we have a consolidation. Could this be a bear flag pattern that's about to resume to the downside? Most certainly something we have to pay attention to. Now, if that is going to be the case, let's go ahead and map this out real quick. That would give us a price completion somewhere about 579.04. Then as we come over and start looking at the 30-minute chart real quick, what do we got over here? Well, notice the MACD indicator got right back to the zero line. And did we really get much above yesterday's high? No, we actually did not break yesterday's high. We came very, very close. We did not quite break that level. So again, that's something I talked about yesterday with one of the nuances with the MACD indicator. If we're still in the consolidation, we get to the zero line, we got to be very mindful that that could be doing nothing more than setting up another leg lower in this market. Now we come over and look at the NASDAQ futures real quick. Notice we came right back up, essentially coming right up to this structure breakdown point right over here. Now, unfortunately, we were not able to take out value area low, which is an untested value area low off the weekly volume profile. I would have preferred to hit this level before the market turned right back down. Now, in the event, we still have the potential for an ABC pattern up if we're able to break above the swing high here, or if we start really breaking below the swing point down here, we have an ABC pattern on the way down. So let's go ahead and grab the Fibonacci extension tool, measure A to B, pull back up for the B to C leg, the corrective leg, which is pulling right up to here. And then we project down. That gives us a price completion at 23,825. Now let's play devil's advocate real quick because we don't know 100% which way this is going to break first. What if we go ahead and we're able to take out the swing point right up in here? Well, in that event, I want to go ahead and measure A to B, B to C, and that gives us a price completion up here at about 25,293. Now, in the event that we do break the swing point here, instead of using this as a primary target, this for me would be a runner target. My primary target would probably be the swing point right here at about 25,159. Then the point of control at 25,210.5, and then all the way up here for that ABC pattern to complete at 25,293. Now, when we come over and look at the daily profiles on the 30-minute chart, what do we got going on? Well, today we had a 623-point range. Overnight, there was some more tension between China and the US. The market comes down and then we rally back up, and then Trump spats out on social media later in the afternoon and we see stocks coming back down just a bit. And we'll see tonight if we get further continuation of this move lower. Now, as we look at this right now, we are currently above value area high and we're right near the point of control at 24,706.75. In the event tonight that we're trading below the point of control, I then want to turn my attention towards this next distribution area on the profile, somewhere around 24,589. Then below that, value area low, anything below value area low, keep in mind, and I forgot to mention this with the S&P 500, but anything below value area low, I want to go all the way back over to the close on Friday. Keep in mind, the futures markets have not closed the gap from Sunday night, and the true gap fill on that would be down here at 24,188. Now, going back over and looking at the S&P 500, you can also see that same gap fill. Now, I do want to warn you guys, as we're looking at these gaps down here near the lows, if that gap is not filled by the close of Thursday, then I'm going to be very concerned that it may be several weeks before we come back to visit that level, which means we'll probably see the markets making new all-time highs. Now, if you want to see about a policy change with my funded futures that could potentially quadruple your payout request, then make sure to watch this next video right here.